Here we go. It's Friday morning again.
Almost Friday afternoon. It's 10:30.
Wow. And the end of January.
Well, January was 278 days long, so I mean, I'm glad it's finally coming to an end. A little month ever.
Zac Valerio, Fairway Mortgage.
Vince Davis with Conway Real Estate. Friday's edition.
So I walked in here with an idea of what we could talk about and found Zac all fired up about a loan estimate from another lending institution. So I decided...
We won't say who it is. We'll just say it's a big bank. Public bank.
And he's feeling very, very strongly about it. So he's gonna talk about it.
I am. So whenever I talk to anybody about a purchase or a refinance, one of the first things I always ask them is make sure you get a loan estimate, right up front. And they're called different things at different places. Like, I don't send an actual loan estimate. I send an approximate loan cost illustration, which is essentially the same, just the format's a little bit different.
Those are required by law or something, right? You have to do a disclosure?
Well, yeah, these will come out in your initial disclosures once you're already under contract, but you can get these up front before you go under contract because, the proof's in the pudding. You want to see numbers on paper because it's very easy to call someone up, a realtor or a loan officer, and say...
Or Rocket Mortgage Online.
Oh, yeah, or anything. Hey, I want to sell my house. What do you think it's worth? $390. And I'm going to net you X amount of dollars.
Yeah.
Right? Without knowing anything. So it's same way in lending. It's very easy to say, what are rates at today? Oh, 3% with no closing costs. Yeah, because it's not in paper, and then people get excited, and then you see something like this, and someone who's done this for long enough can pretty quickly start poking the holes in it as to why what they told you on the phone is not
what's going to actually happen.
Not really what's going to happen. So this is a friend of mine. She's been with this banking institution for a long time. She did her purchase with them, and she was looking to refinance because the rates are so good right now. And me and Vince just kind of looked at the screen a second ago, and they're continuing to go down today. So she told me about it in person. It didn't sound necessarily right to me. And I said, get a loan estimate, have them send it to you, and then send it to me so I can look at it. So we're looking at it, and I kind of showed Vince, I highlighted a couple things on the page, and I'm going to meet her later and kind of go over things that I immediately saw that just don't really add up for me. So one, on this loan estimate, they, in our opinion, put her property value much higher.
Way higher than it should be.
Than what we think it is. And by doing so, they don't have to factor in the mortgage insurance into her payment. So it makes her payment look lower. I don't think there's any chance the property value is this high.
From what we looked at, and we did it really quickly, right?
Yeah.
But now it looks like the loan value is going to wind up being higher than the 80% you need.
Correct. And there's ways around it.
Equity.
You can finance the MI. You can do a one-time buyout on it. There's other options, but it's more important, to circle back that now this payment's not accurate because there's no mortgage insurance in it. And this is a conversation that I would have with somebody right up front. Hey, there are options to get rid of the MI, but the way it looks right now is you are still going to have it. But let's talk about it. So that's the first thing. The second thing is when she had talked to this bank up front on the phone, they said, well, your closing cost should be around $2,500. Well, on here, on the sheet, at the bottom of page 1, you can clearly see that estimated closing costs are around $4,100, which is $1,600 difference than what was discussed on the phone.
So that's a lot.
Which is a tremendous amount of money. Now, she's going to roll all these closing costs into her loan, which is what people typically do on a refinance, but that's still $1,600 more than was discussed. So, again, it's frustrating to see stuff like this. Now, these are like a couple of finer details that, again, people like me, I'm very transparent, I'm very honest, I'm very forward. So I tell people things from day one right up front what I'm doing so that when you see these, you're not surprised. The rate that she was quoted, they never discussed points. And by points, I mean you're paying for your interest rate. So this particular rate that she was told over the phone actually comes with about 3/4 of a point, a little bit more. So she's paying for the interest rate. They didn't quote her what her rate would be with no points, with points, maybe something in between.
And to oversimplify for people who are watching this who don't know what that means, it's essentially a charge to lower your rate, right? It's
Correct.
almost prepaid interest.
And we call it 1 point because it's 1%.
1 percentage point.
Yeah, of the loan amount.
Okay.
So it's, again, it's really easy to talk about really low rates, and you'll see advertisements by mail, by email, on the phone, on the radio. Usually in small print, it'll say these rates are with half a point, or especially Wells Fargo, Chase, Bank of America, things you can look online for rates. They'll show the rates, and then you'll see right below it.
A bunch of disclaimers.
Right, this is with 3/4 of a point or half a point. So this is what my friend has kind of stumbled into, but they didn't talk about points because it was on the phone.
And your interest rate depends also on other factors too, right? Your credit score, your debt to income ratio with the...
Yeah, correct. If it's a condo or if it's a single family home, there's a lot of things that go into it. So
it's all risk management for the lender.
Correct. So it's unfortunate because she was really excited about the rate, and now we're finding out that she's paying for it. And when I give her a sheet today to kind of compare, I could actually do the rate that she was quoted without points. So right there, it's a pretty dramatic savings. So the one that I kind of want to explain a little bit more in detail, and I kind of explain it to Vince because it's pretty tricky, right? I mean, it's interesting. So her rate lock is through March 12th. Okay, March 12th. On any type of deal, refinance or purchase, you're going to pay what's called prepaid interest, right? So when you move into a home, you don't have a payment that month. You're still technically making a payment. It's just a prepaid interest by the day until the end of the month.
Right, it's factored into the money you bring into the title company in order to close.
Correct. So, and again, prepaid interest is based off the loan amount. On her disclosures, her prepaid interest is for 5 days, which means for this to close February 20, it's leap year, right? Mm-hmm. February 25th, 24th, somewhere around there, then she would have 5 days of interest. Now, it's the beginning of February, technically.
Tomorrow's the 1st.
Right, so February 3rd would be Monday. Even if they got this refinance rolling right now, it would be hard for us to close a refinance in 23 days. I think it would be extremely difficult for this institution to do it in 23 days. So let's say it closes on March 10th. Her prepaid interest would actually be 20 days.
Through the end of March.
25, 26 days. Not 5. If it goes to March 26th, which it could easily happen.
Which would have to do in order for her to only be impounded for those few days.
Right. The interest would still be the same 5 days. But now she's broken her lock.
Her loan lock.
Which was locked through March 12th. When you break a lock or union extension, you are charged by the day for a lock extension. And it is not cheap. So she's in a really hard catch-22. Either her prepaid interest goes up, which was not on here, or she breaks the lock and she's got to pay for that by the day too. So it's just things like that. When I see things like this, I get really upset because I get really upset because these are enormous decisions in your life. To buy a home, to refinance a home, and you trust people to tell you exactly what's happening. And there are 3 or 4 things on here that are, to me, incredibly misleading. And a lot of times people trust bankers because that's what we're taught to do, right? Like, we're in financing, we're supposed to tell you the right thing to do. And you sign paperwork, and then all of a sudden at the end, it's not what you thought it was, and it's not even close to what you thought it was.
That's always frustrating for everyone involved.
And I was telling Vince, I feel like settlement statements are very much the same, which is what you take to people who are listing a house or buying, more of listing a house. Like, hey, this is what the amount of money we expect you to make. I mean, they want you to see that.
That's always the important thing, is the bottom line. Yeah.
So when it comes to money and it comes to things like this, don't ever trust anybody on the phone or a spam email or a flyer on your house. Get a loan estimate.
in writing,
have them email it to you. I am so adamant about this. If I can't beat the deal, and if I think this is the best loan for her, I'll tell you, because I want what's best for people. I don't care about putting units in my pipeline. I want what's best for people.
And that's true. I mean, we've done transactions in the past where Zac has told my client, go ahead and work with this other lender. It doesn't happen very often at all, actually.
No, but there's been times.
I have seen him do it. He's not exaggerating here. If he can't beat the deal, he'll be straight up about it.
Yeah.
Give up the loan.
And I mean, I have a cousin right now who is buying a new build, and he's a veteran, so he had no down payment, and then they were going to pay his closing costs. Well, there's no reason to use me because I would have closing costs. So I've helped him every step of the way, and I've looked at all his paperwork with him. This is family, like you would think family would, no matter what. But it's like, hey, buddy, take the new build lender because you're not going to come in with any money. It's a better deal for you. So I'll try to wind down a little bit.
Otherwise, you're going to be spooled up for the rest of the day.
A little bit worked up today. So.
But yeah, so that's really the message for today. If you're looking at stuff, get everything in writing. Period.
Mm-hmm.
If you want to, we're more than happy to review it with you and for you, and promise to be straight and forthright about, these little nitpicky details. Because the devil's in the details. It really is.
Mm-hmm.
And there's nothing worse when, somebody thinks they're coming into closing with $500 and then it turns out that they're really not.
Yeah,
they're coming in
much
with
more.
$2,000.
Mm-hmm.
Which, if you have it, still, when it's unexpected, just sucks.
Yeah. And rates are awesome. Talk to us about buying a house or refinancing. So you're on the fence. I mean, now's the time. It really is. And we'll do our best to guide you through it.
Cool. Well, thanks for watching. Zac Valerio, Fairway Mortgage.
Mr. Davis with Conway Real Estate.
And we will...
Happy Super Bowl weekend.
Oh,
Super Bowl
yeah.
and Waste Management Open.
That's right. Super Bowl is like day after tomorrow. Holy
Mm-hmm.
smoke. This is what happens when you're self-employed. These things sneak up on you.
Yeah.
Like,
not that I'll be enjoying it. I'll probably be here. So.
All right. Thank you.
Thanks, everybody.
Bye.